If you ask me what the smartest assets to invest in for 2025 are, my answer will always be the same. Those that generate constant cash flow, protect your money against inflation, and have the potential to multiply over time. The key to building wealth isn't working for money, but making money work for you. Here are the 5 assets I consider essential for those who want to secure their financial future by 2027 and beyond. 1. Real estate, a tangible investment that protects against inflation and provides passive income. When I talk about real estate, I'm not just talking about buying a house to live in. I'm talking about properties that generate cash flow. Real estate is one of the most powerful assets because it's tangible, scarce, and protects your money against inflation. As prices rise, so does the value of properties. And if you play your cards right, you can create significant passive income through rentals. My rich dad used to say, land is one of the few assets that truly grows in value while you sleep. This is true. Imagine buying a commercial or residential property in a strategic area. As the economy recovers and grows, that property won't just appreciate in value. It will also allow you to collect rent every month. That passive income can be reinvested into other assets, accelerating your path to financial freedom. But here's the trick. Don't buy real estate on a whim or as part of the American dream. Do it with a clear purpose to generate income. For example, in 2025, look for undervalued properties or areas with high development potential. If you can finance them with a loan, using the bank as a partner, even better. The goal is for the tenant to pay the mortgage while you accumulate the property's value. Additionally, real estate is a hedge against inflation. When costs rise, so do rents. This means your cash flow can automatically adjust to the rising cost of living, something money in the bank will never do. Remember, the rich don't hoard money. They invest in assets that give them more money. So, real estate is one of the safest and most reliable ways to build long-term wealth. If you want to multiply your money by 2027, make sure to include this asset in your portfolio, but do it with education and strategy. Don't buy because everyone else is. Buy because you know that property will work for you. 2. Gold and silver. Precious metals that act as stores of value in times of economic uncertainty. When I talk about gold and silver, I'm not talking about jewelry or ornaments. I'm talking about precious metals as financial assets, as insurance against economic uncertainty and currency devaluation. The rich have always known something the poor and middle class ignore. Fiat money, unbacked paper currency, is an illusion. In times of inflation, recession, or financial crisis, gold and silver shine brighter than ever. My rich dad used to say, gold is the money of the rich, while paper money is the money of the poor. This isn't an exaggeration. Throughout history, civilizations have turned to gold and silver as safe havens when economies collapsed or currencies lost value. Why? Because these metals have intrinsic value. They can't be printed by governments or manipulated by central banks. Now, why invest in gold and silver in 2025? Because we live in an increasingly unpredictable world. Interest rates fluctuate, global debt reaches unsustainable levels, and currencies weaken against inflation. In this context, gold and silver act as insurance for your wealth. They won't make you rich quickly, but they'll preserve your wealth when other assets fall. Here's the key. Gold is more stable and has a higher price, making it ideal for protecting large amounts of capital. Silver, on the other hand, is more accessible and has greater growth potential due to its industrial use. While gold is seen as a safe haven, silver also plays a key role in sectors like technology, solar energy, and electronics. This means that beyond being a hedge, silver can benefit from industrial demand, which could drive its value up in the coming years. But be careful. Buying gold and silver isn't just about having bars or coins in a safe. You can also invest in gold and silver ETFs, futures contracts, or even mining company stocks. However, My advice is to keep a physical portion of these metals in your possession. Why? Because in a true crisis, paper assets, stocks, bonds, etc., may lose value, but physical metal will remain valuable. Another reason gold and silver are essential in your portfolio is diversification. If you own real estate, stocks, or businesses, gold and silver act as a counterbalance. When other assets fall, these metals tend to rise or stay stable. It's like having an anchor in a storm. Gold and silver aren't just shiny metals. They're financial tools the rich use to protect their wealth. By 2027, when the global economy may face even greater challenges, these assets can make the difference between losing your wealth or multiplying it. Remember, the rich don't bet everything on one asset. They diversify, and gold and silver always have a place in their strategy. 3. Cryptocurrencies like Bitcoin. The digital gold in a transforming economy. When I talk about cryptocurrencies, especially Bitcoin, I don't do it as a technologist or a speculator, but as someone who understands that the financial world is changing radically. Cryptocurrencies aren't just a passing trend. They represent a new form of money in a global economy rapidly moving toward digitalization. My rich dad always said, money is simply an idea backed by confidence. Today, Bitcoin and other cryptocurrencies are building that confidence in the digital world. Bitcoin in particular is called digital gold because it shares many traits with physical gold. It's scarce. Only 21 million will ever exist, decentralized, not controlled by any government or bank, and resistant to manipulation. But here's the big difference. While gold is tangible and heavy, Bitcoin is intangible and can move around the world in seconds. This makes it an ideal asset for an era where technology and globalization are redefining how we interact with money. Now, why invest in cryptocurrencies in 2025? Because we're in the middle of a massive economic transformation. Central banks are printing money uncontrollably. Global debt is reaching unsustainable levels, and fiat currencies are losing value. In this context, Bitcoin and other cryptocurrencies offer an alternative, a monetary system based on blockchain technology, which is transparent, secure, and limited in supply. But here's the key. Don't invest in cryptocurrencies because everyone else is or because you expect to get rich overnight. Do it because you understand their role in the future of finance. Bitcoin, for example, isn't just an investment. It's also a hedge against inflation and the devaluation of traditional currencies. As long as governments keep printing money, Bitcoin will remain an attractive option for those looking to protect their wealth. Beyond Bitcoin, other cryptocurrencies like Ethereum, which enables smart contracts and decentralized applications, could revolutionize entire industries. Smaller cryptocurrencies or altcoins also have potential, but be extremely careful. Not all will survive, and many are pure speculation. As I always say, don't put all your money on one horse. Diversify, educate yourself, and then decide. A word of caution: cryptocurrencies are volatile. Their value can rise or fall dramatically in a short time, making them risky but also full of opportunity. If you can stomach the fluctuations, you could see significant growth by 2027. However, if you're new to this space, start with a small amount you're willing to lose while you learn. Education is key before entering this market. Cryptocurrencies, especially Bitcoin, are the digital gold of a new economic era. By 2027, when the traditional financial system may be even weaker, these technologies could solidify as pillars of global wealth. The rich don't fear new ideas. They leverage them to stay ahead. If you want to multiply your money, consider including cryptocurrencies in your portfolio, but do it wisely and cautiously. For own businesses or productive assets, creating value with your skills and effort. One of the most powerful lessons I've learned in my financial life is this: the rich don't work for money. They make money work for them. And one of the best ways to do this is by building your own business or investing in productive assets that generate positive cash flow. My rich dad used to say, the real secret to wealth isn't how much you earn, but how much you can create. Owning a business is one of the best ways to do just that. Create value, solve problems, and generate income that doesn't depend on your direct time. When I talk about businesses, I don't just mean big corporations. They can be small local ventures, digital startups, or even projects based on your personal skills. The size doesn't matter. What matters is that they generate positive cash flow. For example, if you know digital marketing, you could start an agency offering services to other businesses. If you're good at repairs, you could launch a home maintenance business. If you prefer something fully digital, you could create an online course, an app, or an e-commerce store. Here's the key. A business allows you to leverage your time. You use employees, automated systems, or technology to scale your income. While a traditional job pays you for your time, a business can keep making money even while you sleep. This is what I call a productive asset. Something that creates value continuously without needing your constant presence. But don't be mistaken. Building a business isn't easy. It requires effort, dedication, and above all, financial education. Many people fail because they start without a clear plan or spend all their initial capital on unnecessary expenses. My advice? Start small, validate your idea, and ensure it generates cash flow before expanding. Thanks to the internet, you can launch a business with very little capital today. Another advantage of owning a business is that you can tailor it to your strengths and passions. If you love food, you could open a restaurant or sell food products online. If you enjoy teaching, you could create an educational business. The key is identifying what problem you can solve and how you can monetize that solution. Remember, customers don't pay for product or services. They pay for solutions to their problems. Businesses also offer something invaluable: control. Unlike working for someone else, where your income depends on external decisions, a business lets you take charge of your financial future. Of course, you also take on risks, but these can be mitigated with education, planning, and disciplined execution. So, owning a business or productive assets is one of the most powerful ways to build wealth because it combines your skills, effort, and ability to create value. By 2027, if you invest time and resources into building a solid business, you could see exponential income growth. The rich don't wait for opportunities. They create them. You can too. Start today, but do it with a clear purpose and a strategic plan. 5. Financial education and finance books. The most powerful investment you can make. If there's one thing I've repeated tirelessly throughout my life, it's this. Financial education is the most important asset you can own. No matter how much money you have in the bank or how much real estate you own, if you don't understand how money works, you'll eventually lose it. My rich dad used to say, financial knowledge is like a map that guides you to financial freedom. Without it, you're lost. And there's never been a more critical time to invest in your financial education than now, especially if you want to seize the opportunities that will arise between 2025 and 2027. When I talk about financial education, I don't just mean reading textbooks or taking traditional university courses. I mean learning about investments, taxes, cash flow, markets, and how financial systems really work. Today, thanks to the internet, you have access to an immense amount of free and paid resources, books, podcasts, videos, webinars, and online communities. But here's the key. Consuming information isn't enough. You must apply what you learn. Knowledge without action is as useless as no knowledge at all. Finance books are a great place to start. For example, Rich Dad, Poor Dad isn't just a book. It's a tool that has changed millions of minds worldwide. I also recommend classics like The Richest Man in Babylon by George S. Clason and Think and Grow Rich by Napoleon Hill. These books don't just teach financial concepts. They help shift your mindset about money. Remember, the poor work for money, while the rich make money work for them. This shift in perspective starts with education. Investing in financial education doesn't just help you understand assets like real estate, cryptocurrencies, or businesses. It also prepares you to make smart decisions. For example, many people lose money on investments because they don't understand the risks or how to diversify properly. With a solid financial education, you can avoid costly mistakes and maximize your returns. Another reason this asset is so powerful is that no one can take it from you. Knowledge is permanent. While money in the bank can vanish in an economic crisis or property can lose value, the knowledge you gain today will benefit you for life. Plus, when you invest in your financial education, you don't just improve your own finances. You can also share that knowledge with others, creating a positive impact on your family and community. In short, financial education isn't just an asset. It's a foundation on which you build all your other assets. By 2027, the world will be even more complex and competitive. The opportunities will be there, but only those with the right knowledge will be able to seize them. If you want to multiply your money, start by investing in yourself. Read, learn, apply, and keep growing. The rich don't wait for others to give them answers. They actively seek the knowledge they need to succeed. You can too. Start today, because the future belongs to those who are prepared. This content is high value, and we provide it to you for free. Your way of supporting us is by leaving a like. And if you enjoy this type of content, you're invited to subscribe to the channel, where you'll find a variety of videos to help you grow. Thanks for watching, and see you in the next video.